All right. Good morning, everyone. Hope everyone had a good holiday. Happy New Year. We are off to a great start in 2022 already, just from looking at a few sales. But thank you for joining us for another Q&A with Delia. Again, we do this every month on the second Thursday. Today, we are joined by Kyle Stolte from Heritage Financial. Hopefully you guys brought a bunch of financial questions because we have a really good expert today to help you guys out with any questions you might have regarding financing or anything like that. So with that said, let's just jump right in it. If you guys have any questions for Delia, go ahead and take it away.
Hi, Delia. It's Lena. How are you?
I'm good, Lena. How are you?
Good. I have a question, and it might be really stupid, but I've always wondered this, and it has to do with multiple offers. So, all right. So I was representing a buyer, and it was a multiple offer situation. We ended up getting it, so yay. I put in an escalation clause, and that was fine. But is it a Maryland thing that if I were the listing agent and multiple offers were coming in, is it just that, I mean, why can't you tell everybody, and I know that you don't, but why can't you just say, this is my highest offer, kind of like an eBay type situation?
Because then if I was the listing agent and I would say, Lena, this is my highest offer. And then you would say, okay, I want that. And then I tell somebody else, you have to cap it somewhere. You have to stop the offers somewhere. And that's why they did the escalation clause. You're willing to go this high with this cap.
Right. And I get that. And I get that it makes for a level playing field for everybody. But is that the law in Maryland? Or because I think for what I've been reading, I feel like some other states might just put that out there and just say, you know, this is my offer now. I mean, I understand it's unfair and someone will certainly never win out that way. But and I know the listing agent can't set, you know, doesn't and never has said what it is other than put in your very best offer. And that's really all you can do. I was just curious.
You know, I'm not going to say that, you know, I will definitely look and see if it's in writing is the law. It could just be an ethical thing, you know, and fair housing and all that. Specifically, that wording, I can definitely look into.
Right, that makes sense with the fair housing.
Yeah.
Okay.
Yeah.
Just always wondered. Okay.
Yeah,
Perfect.
I can look into that.
And then lastly, because I'm thinking of, like, for instance, proposals with things that have nothing to do with real estate, but usually like a government proposal, the highest one gets it and the other ones, that's it. That's the end of it. Where in some situations, you'll see the agent coming back saying, we've had multiple offers. If you want to revise it, like they give people an opportunity, which basically is saying, go up, you know, if you really want this. So like, it's like a gray area or there's a fine line there.
Yeah, I'll definitely look into the fair housing part of that and see if it specifically says that.
Perfect. Thank you.
Okay. You're welcome.
Hey Delia, this is Coles. I got a simple question for you.
Hey, Cole.
So I've had this happen multiple times where I put in an offer and let's say I say that I can close in 21 days, right? Really fast turnaround. And then the listing agent will say, hey, maybe like 3 or 4 days after I put in the offer, then they'll say, we're going to make a decision on this day, which is essentially, let's say it's 5 days after I put in my offer, and then my offer gets accepted. But then they accepted it at the 21 days from when I submitted the offer. So just trying to understand what is the actual closing date, you know, is it from the acceptance of the offer or from what you initially put in the rest?
Yeah. Unless, okay, so you submit an offer, it's dated the 1st. They come back and they accept it on the 5th, right? So the acceptance of that contract was the 5th. But then what you should have done is extend that settlement date as well, because now they've cut you down 5 days, you know, because the time starts when it's accepted, which would be the last person that signs it.
They'll do a change of terms.
Yeah, as far as extension of the 21 days. So they extend it 5 days.
Okay.
With a change of terms. Yeah. A lot of people forget that and they're cutting into your settlement time, and then the loan officer says that's impossible. And you're like, well, so yeah, always extend that, always.
Always extend it ASAP. Okay, that works. Thank you very much.
Yes.
To follow up on that though, Maryland's contracts, obviously, they don't have a 21 days, they have a date. So when you submit the contract, if they're gonna hold on to it, you have to have something in writing, I guess, upfront when you submit it that says you want 21 days, correct? I mean, otherwise, there's no guarantee that they'll do the change of terms. I mean, you're committing, when you write your offer, you're committing to a settlement date, not a settlement time, right?
Yeah, exactly. It's a settlement date. Yeah. And, you know, I understand what you're saying, because they can always come back and say, no, you're not going to do it. But then, a lot of agents out there, no, you can't close anything in 20 days. It's just, you just can't, it's not happening unless it's almost done. All you do is just put an address in, Ask Kyle, it takes about 30 days to close now, 45.
Yep.
Yeah.
Well, I mean, 30, it can be less than that, but
Yeah.
it's mainly about just, if you submitted it, you didn't know that they were going to take 5 extra days to make a decision. So I think it's a simple conversation, and
Yes.
if there's a deal that they were going to accept because of the closing date, but didn't because yours was sooner, then that's a conversation to be had. But
Yeah.
of the agents that I've worked with, whether they're in this meeting or not, they mostly will do the same thing that Cole's mentioned, is just, put an addendum in right away and say, hey, the settlement date's 5 days added here. So just, so we're on the same page, and you do it early and not later, you know?
Yes. You do it right away. Yes. So I had a scenario that came up about a month ago. I believe the G-Car contract is different than the MAR as far as the disclosing of the conventional or FHA programs. G-Car allows you to put if there's a first and a second. MAR does not, if you notice the MAR contracts. And the buyer could not get the second. Okay. And now they're fighting over the EMD because they were told, they weren't told that there was a second, where there's no place to put it on the MAR contract. So right now they're fighting over the EMD, and I'm talking to the legal hotline and the forms committee to put that on the MAR. On the Maryland contract, because there is no place. So your people could have a first and a second. They got the first, but they didn't get the second, yet the second wasn't disclosed. So now they're fighting over the EMD. So if there is a first and a second on a MAR contract, I would highly recommend it that you put it somewhere, an addendum, add it somewhere, that so that the buyer or the seller knows that this person is going for a first and a second. It's being contingent on both of those. That's important. Did anybody get into that trouble to where they couldn't get the second and then financing fell through?
No.
Yeah. That was a new one to me, and they fought over it, and they're still fighting over $20,000. So, wow. I know.
I had a situation where a grant didn't get through, and
Yeah.
they didn't give the full scope. They put it in as a conventional addendum in the contract, but there was a grant money involved there too. So, which they didn't volunteer. I found out myself.
Yeah, and then these people trying to get out, and then the seller didn't know, and so just always disclose, exactly what it is. They should have disclosed the grant. So we're trying to revise the contract to add that second, the second part of the loan. So that's important. So, anything else?
Yeah, I do. I have a question. I'm contemplating starting to work with another agent, and I, as a teammate or a partner or whatever, and I've never been involved in a team, and I'm not completely sure when something falls under the team rules and regulations versus just two agents working side by side. Kind of curious what considerations have to be done in a case like this.
Well, in the DLLR, there's a section in there about the rules and regulations of teams. Okay. To be honest with you, I think you're a little bit more restricted when you work as a team, as far as the advertising goes, as far as what needs to be disclosed, there's like almost 2 pages worth of things that a team has to do, right? Working side by side, and I have a lot of agents that work together, but not necessarily a team. They like other agents like the team aspect because it makes them look like they're part of a team and a group, and they advertise that way. It's all on what you want out of it. The recognition of being on a team or just having, somebody to work with.
So when does it become a team versus just working side by side?
Just the recognition that you're a part of a team. Like we have several teams, Gary. Who do we have? We have the Briggs team. We have the Diane Millard team. And there are teams of 3 up, as much as 3 to 6, and they do all their advertising as, this is my team. You just don't have me. You have my everybody that works with me too. So it's just I guess how you want to portray it. But working, with somebody, to me is easier as far as disclosing things, as far as the advertising guidelines and things like that, which I think Gary's pulling it up now. The rules. Yeah, there it is.
Yes, I'm gonna link this.
Using notes, to a team.
So these are kind of the regulations directly from the DLR in regards of teams, do's and don'ts.
Mhm.
But pretty much as Delia says, it just really depends on how you want to market yourself. If you'd rather market yourself as an individual, just working with another individual agent, to me, I wouldn't consider that as a team, because a team is more of you're working together all the time. You're kind of like staff almost, even though you're independent contractors. So yeah, it really just comes down to how you want to market yourself.
Are you sharing this to somewhere so he can go find that?
Yeah, the link's in the chat.
Okay.
Thank you, guys.
Does anybody else have any other questions?
Hi, I have a question.
Hi, Mia.
Hi, I'm sorry, I'm homeschooling, doing a lot of things, so I had the camera off. But my question was, when you're working with a builder and the builder is giving, I guess, a seller's credit, do you have the builder fill out those forms, or you just upload into SkySlope the documents that the builder provided?
Yeah, typically builders do their own contracts and write all any changes or extensions. So the only thing that we're going to need as far as with the builder's contract, it typically covers everything we need except maybe the buyer agency agreement. And any other disclosures that they don't, because like if it's in Anne Arundel County, just make sure like the Anne Arundel County required disclosures are in there. If it's
Okay.
So,
This is in Howard County.
yeah. So if there's any Howard County required disclosures that are not in the builder's contract, then at least get your buyer to sign it. Now, builders probably won't sign it, but at least you're disclosing it to your buyers about that this is the requirement.
Okay. And even with the builder, they still need to sign agency, because isn't that like a whole different section under DLR?
No, all you need if you represent the buyer is the buyer agency agreement between you and the buyer. Mhm.
Okay, but not agency. So
No.
but just, okay, got it.
Mhm.
Thank you.
Okay. Do we have anybody else that have any questions?
Hi, everyone. I have a question about working with a buyer, and just the way things are going. The offers are coming in $40,000, $50,000, $60,000 over asking. What is our obligation to the buyer to tell them from an insurance standpoint that if the sale goes through, that they might not be able to insure the property for the full amount? What is our obligation there?
Well, typically, you mean if it doesn't appraise?
Yeah, well, you already have an appraised value,
Yeah.
and these offers are getting out of hand with limited inventory, or just that somebody wants the property.
Mhm.
I just don't understand how what our obligation is to tell the buyer if something totaled the house, that they're not going to get the full value for the house, whether that would affect them. And do we have to make them aware of things like that?
Well, you mean, okay, for instance, the appraisal came in at 500, but they bought the house for 550.
Right.
And they put $50,000 down. Okay. And so they're, you obligated to tell them. It's not going to hurt not to tell them. In other words. Okay. I don't know if it says it in the, I don't believe it says in the appraisal form. No, it doesn't say it in that form. So, I mean, yeah, I would, if you really don't think that they know this, or even if you use it, I think it, that way they can never come back to you and say, well, why didn't we buy this house for this?
Right. Yeah.
You know what I'm saying? So you can always.
Well, no, they could come back and say, we didn't know that. You should have told us.
Yeah.
And we have to put so much money out of our pocket now, that kind of thing. So I don't know if it could come back and haunt us, and they would sue us for the difference or something like that.
Yeah. And, anything's possible. We all know that. And, when I have agents, they get, they're nervous with their buyers and they're afraid that they're going to come back. And I just said, then just especially when buyers don't want any contingencies, none. We're like, you don't want any contingencies. And then when something happens, it's your fault, right? So, our job is to protect them as much as we can. And I know it's hard with the market that we're in, but we always have to protect the client. And I tell my agents sometimes to put in writing that, they're aware that they're not asking any free closing costs. There's no contingencies, no home inspection, and that there's no way out of this contract. Because these people, they're just so eager to buy, and they want to be very aggressive. And it's your job to let them know that your EMD is at jeopardy here. I can't, there's no outs here. You're tying my hands. But you do that in a certain way. And it's really helped agents that make that clear to these buyers, because it's when it comes down to it and they want to get out of the contract of their EMD, agents like, well, I told you there was like no contingency here. You knew going into that, and they have it in writing, because it's happened more now than I've ever seen before.
Yeah.
So, yeah.
All right. Thanks.
Hey, Norman, how are you?
Hey, good, Delia. I was going to just throw in a few more comments on there, having been a licensed insurance agent and district manager for Nationwide many, many years ago. Yeah, a lot of that's, property casualty agents are licensed individuals. So as far as, going beyond the scope of our license, I'd probably leave much of that explanation to the insurance agent. And at the same time, a lot of people believe that the full value of the purchase has to be insured, and that may be required by the bank or the lender, but it's really not proper, because one, the land is not going anywhere. Two, and that has a value. And most of the time people are purchasing an all risk policy with a replacement cost clause or feature to it, such that if the insurance agent has done their job, asked all the questions, calculated the proper replacement cost of the property, and the property ends up costing more to be repaired or replaced, it's on the insurance company, not the purchaser. So, or not the insured. So that's just my 2 cents.
It's good to know. Does anybody have anything else? If not, we're going to let Kyle. I think Kyle wants to present something as well. Correct, Kyle?
Hi, I have a question.
Yes, ma'am.
I know, Delia, one time we were talking about questions to ask lenders, and I don't know if you have like a sheet or if that's gonna take too long. I know it's probably I don't know how many questions, but if you could give us some advice on that, that would be great.
Hey, Kyle, are you there?
I'm here.
Okay. She's me and I had a discussion a couple of weeks ago, maybe a month ago, that she represented, or even if she represents a seller, a lot of agents now reach out to the loan officer to see, have been qualified. Is it a good, is it easy? What questions have you been asked from a buyer's agent to secure the deal?
So I actually have this on my list of things to talk about today, because a lot of loan officers do not call the listing agent after the offer has been submitted. And that's something that you want to see in a partner of yours, reaching out to the listing agent and saying, like, here's where they are, so you don't have to ask the question. But the questions that, and I don't know the legality on your side of it, Delia, but you would sound intelligent if you ask about, have you received documents, tax returns, pay stubs. I mean, you've already looked at all that stuff, correct? Yes. Have you run it through an automated underwriting system? And if so, what was the result? So there's a couple different automated underwriting systems that we have access to. It costs money to do some things like that. So smaller banks may not do it, but most lenders will. And if you ask that question, that automated underwriting system tells the loan officer exactly what you're going to need for underwriting. So if there's anything in the loan application that is a red flag, it would show up in there unless it was omitted from the loan application if the buyer didn't tell us something. So asking if they've done that, asking if they have the docs. And then I know you guys can't ask about credit score or anything like that, right, Delia?
Correct.
So, and I don't know about like debt to income ratio, but if it's an FHA loan, ask why FHA and not conventional, because a lot of times people think it's just credit score, and that's not the case at all. For example, I had a recent one where a client had a 780 credit score, a very good credit score, but we weren't able to use her husband on the loan. So the debt to income ratio was a little bit higher, but they were very well qualified, but we just couldn't use him for one reason or another. So they were going to go through an FHA loan very quickly, and it was probably a better loan than some of the conventionals. If I'm the seller, I would have accepted that because I know, the difference. But asking what type of loan and why it's that loan may help you if you're in a bind between 2 or 3 different offers. So just because it's a conventional doesn't mean it's easy. Conventional goes down to 620 credit score. That's not an easy conventional loan to do, but they may put that on the sheet just to make sure that they win an offer, which is fine. I mean, you can get the loan done, but you're going to jump through more hoops. So type of loan, why you go that way, if they've done the automated underwriting system, and have they review the docs? Because if you're working with an online lender, like a Quicken Loans, Navy Federal, you can go on their website yourself and just type in whatever you want and they'll get you a letter. You'll get the letter the same day, but no person has looked at your loan. Nobody has reviewed income documents and they haven't requested it. So if you ever get a client that comes to you with that letter from an online lender, know that it probably wasn't looked at. And if it was, a lot of these companies hire people right out of college, or people who have 2 years of college, and it's a call center. I worked in one when I started my career. I knew nothing, and I was giving letters out. So I know now what those companies do. They just churn people in and out and teach them what they need to know, but it can cause a lot of mistakes. So asking those questions helps. But if it's an online lender, you want to talk to a loan officer and make sure that they've reviewed all of the documents. I mean, that's first and foremost, but and then the automated underwriting system is going to tell you everything you need to know.
Thank you.
help me?
That was
Yeah.
very helpful. Yes, very helpful. So can you ask about like debt to ratio or how close they are?
I don't know. That's Delia, I think.
I've
right?
always, I don't, talk about credit, but I ask them how their ratios look,
Yeah, and I think
And
asking
they
the
all,
question like,
they answer you, they'll let you,
and I think asking the question like why you're going conventional or why you're going FHA might allude to that answer that you need with that one. If you're not allowed to ask it, I don't know, but the ratios, when we give out a pre-approval letter, we like to build in a cushion because you guys know, and I know probably some of you are smiling with your cameras off right now. When I give you a letter for 350 and you come back and say, in order to be competitive, we need to offer 370, can you make it work? Well, we build in a little bit of a cushion, but it depends, who we're working with. So, and property taxes are different for each property. So we have to kind of account for that, and HOA dues and all that other stuff that we didn't know about before we got the contract. So I would say you if you ask about it, that's fine. But I'm curious, do you know what the limits are for each of the loan programs? Like how FHA or conventional looks at that?
No, I don't.
So if you ask the question and you get an answer, you may not know where to go with that answer, but FHA, high DTI, 57% is 56.99 to be exact. Conventional is 50. VA says many different things all the time. They change it, 60 sometimes, as high as 60, but all comes down to the automated underwriting system. So somebody could have a 55 debt to income ratio, but have $2 million in the bank. So the 55 doesn't mean anything because they're retired. They have $2 million. They're not touching it. They can draw on it whenever they want. So there's other questions that you would want to follow up with when you find out, why, if the DTI is high, what compensating factors are there that should make me feel good about accepting this offer. And that's when the loan officer will say, they have this much in the bank, they're all set to go, the money's already with title, whatever, but if they give you a high debt to income ratio, ask where's the sweet spot, where's the compensating factors that's going to make me feel warm and fuzzy about accepting an offer when it's this high of a debt to income ratio.
I have a question. Can you hear me?
Got it. Thank you.
You're welcome.
Hello, can you hear me?
Yep.
Question on VA financing.
Mhm.
Are you still able to use income from rental properties if it's, say, a 4-unit building towards qualifying?
As long as you're claiming the income, you should be able to use it. So I don't have, even then, if it's a newly purchased property, are you saying if the veteran is buying a place and living in a 4-unit place?
Well, if it's a 4-unit property, let's say it's 4 units, they will live in one of the units. The other 3 are occupied. Can they use any of that residual income monthly to qualify for the loan? I believe it used to be that way back in the day. These days, do you have any idea how that's handled?
My understanding is that what would happen is when the appraisal is done, there's a form that the appraiser would fill out. And I don't think you can use it to qualify unless, I'm trying to think, because I haven't had a 4-unit. I've had a duplex. Let me get back to you on that. I know conventional and FHA, but for VA, I'll have to check.
Okay.
A lot of lenders don't do the VA 4 units, though. They have the overlays. They'll do, 1 to 2 units, but let me double check. John Robinson, I'll get you.
Yes, sir.
I'll get you an email after this. And in fact, I'll send it over to Delia and she can email everybody just in case anyone else had a question like that. But
Thank
I don't
you.
want to give you the wrong answer.
Appreciate it. Additionally, what is the max loan for VA these days?
There is no VA county loan limits anymore. They did away with that.
Okay.
So it does matter because there is jumbo or high balance loans. So that affects the pricing or the rate that they're going to get. And maybe if they need to have reserves or whatever, but without going too deep into that, the VA will allow pretty much anything they say, but there is limits to what's called the borrower's entitlement. And every veteran starts, when they've served enough time, they become eligible for a VA loan. They get this $36,000 of entitlement. And there's a calculation that you do. And if you ever have a VA foreclosure or whatever, maybe you have another VA, because you can have more than one VA loan at the same time. And if you do have that, then that's going to limit the house that you can buy next. So if someone is transferring from Florida to Maryland because of their orders and they have a house in Florida under a VA loan, they can rent that out and buy another house with a VA loan here. But we have to use the county loan limit and the new loan amount, and the appraised value and the down payment, all that stuff. We have to figure, there's a calculation to make sure that they can lend or get that amount of money from the VA backed loan.
Okay.
So the county, there's no thing in the guidelines that say, you can't spend over, $700,000 on a loan or something like that. I'm sure there's a limit in the millions, but I've seen $1 million, $2 million VA loans.
Right. It has been going up over time, and I appreciate that.
Yep.
May I ask a question in general?
Yeah.
I've been trying to identify where the good source is for VA foreclosure properties or HUD foreclosure properties. I believe I've stumbled on where HUD properties can be referenced. But do we have a specific location for VA properties? I mean, back in the day, the sheet would be generated by VA and you would go online and reference that list. Now it's being parceled out, I believe, to a management company, and then they may disseminate some of those listings to brokers, et cetera. How exactly is that being done these days?
Delia, I think, I
So
mean,
you're looking for VA foreclosed property?
Right, if I wanted to identify VA foreclosed property.
Yeah, I know that the HUD has, Norma, do you know of any where he would find?
I think it's a little bit different though, because the VA only backs the loan. They don't actually finance the loan. So I don't know if the VA has ownership after a
Loan goes
foreclosure.
belly up. Yeah.
Yeah,
Is that-
I'd have to look on that.
That might be REO relative to the particular lender, maybe?
Yeah, I mean, the VA, the whole VA backed loan is just that the lender, by charging the funding fee to the VA and to the veteran, they get a portion of their funds back, the lender does, if the veteran forecloses. So
Right.
I don't know the answer where you find the properties, but I also don't know if you're gonna find properties.
Yeah, I don't think you are. Yeah.
Yeah,
because
I don't-
I went VA way back when, but I had my mortgage with a local bank. So,
Right.
I think it's going to be under, I don't think that there's specifically a VA foreclosure list out there of properties.
Right. It's likely showing up as a REO with the lender, maybe?
Yeah, probably. I'm just gonna check real quick.
Because they've got to be out there. VA is still financing, or shall we say, allowing veterans to buy properties.
Yeah, I mean, there's a bunch of articles here on VA foreclosures.
I'll do a little bit more research on that. I do have another question on Client Bay in terms of the forms. I know we have a section there where forms are provided on behalf of our usage. How complete is that? And please pardon me for not having looked at it completely yet, but is everything that we need to perform a transaction in a particular jurisdiction there in that form inventory?
We are getting there. So the actual forms that you would get, well, let's back it up a little bit. So the first, in order to get the forms that you need to know what your checklist is in order to pull those forms, right?
Right.
So the checklist and everything per county and per state are in Back at You currently. They're ready to go. The forms are not, however. We're still working on trying to bring those in. However, forms are available to you via zip forms if you are part of AA car or G car now. Before, I think NAR had that deal, but they've since done away with it, and they were going to make you pay for zip forms, but G car and AA car kind of pick up the cost for their members. So now you have access to all the forms via zip form.
PG car too, right? PG County, right?
And I believe PG car as well. So zip forms should be available to you via your associations. And then you can bring those forms into Back at You. Well, currently, right now, we're still using SkySlope for the transaction management and all the checklists and uploading and all that. We will eventually be pushing everybody over from SkySlope into Back at You, just so everything's in one place. But yes, we are on that track, and we will probably be pushing everyone over to Back at You within the next 2 to 3 months at the latest.
Okay, but the checklists are there. And,
yes, they are.
A good source to go by. Thank you.
Yeah, and if you need it, so there's 2 ways to get your checklist in Back at You. The first way is just to manually find them in the files section. If you go into Files, Documents, Library on the left side, it'll give you a checklist folder, and you can just select your checklist by state, county, and transaction type. Now, when you're creating a transaction in Back at You, similar to how you're doing it in SkySlope now, once you pull that information from the MLS, which is done automatically when you create the transaction, it automatically recognizes the type of transaction and the county, and it'll pull that checklist for you automatically. So that way, you know immediately what forms you need to pull from zip forms and upload.
And Gary, we're
Thanks
gonna
for
have
your
training
patience
on
on
that, correct?
Yes, we will have formal training on that once that's all set up. Again, within 2 to 3 months.
Thanks for everyone's patience. Final question, and that is I'm still having a problem getting text alerts for any lead that might come in. It says on the page under company in the client bay that lead notification halted. What exactly does that mean?
I believe you're looking
Might
at.
that be some?
I
Might
believe,
that be some? Go ahead, excuse me.
yeah, I believe you're looking at the company like tab on the dashboard for
Right,
a
right.
little box that says like leads halted or something like that. I believe that box is just to notify you if there's anything outstanding that you need to do with a current lead that's assigned that's holding you up from getting more leads. So if that box is blank, then you're fine. Basically, it's just to keep you on track of your leads, to make sure that you can get more leads.
All right. But that should not be contributing to the problem I'm having with getting that lead notification.
No, yeah, and we've gone
By
back
text.
and forth with back at you regarding that issue for you. I think you mentioned that your phone for some reason was blocking, I think, that number because of a zip code or something like that, which I think you recently released. So
area code digits, right?
Yeah,
but
so
it's been deleted. So that's not the problem now. Yeah.
Okay.
But I'm still working with it, and Samuel at Client Bay back at you is also taking a look at it as well.
Yeah, we're still looking into it. I already looked at your settings to make sure that there was nothing blocking, one, sending you leads, and two, text messages specifically. Everything, all your notifications are set correctly, and there's nothing blocking it. I don't know why texts aren't going through. I've tested it with other agents and my own cell phones, and they have been working. So I think it's just an isolated incident with your phone for whatever reason, or it could be your carrier, that even though they said that they released that zip code, it might just take some time, or they didn't do it correctly. I don't know, but we're still looking into it.
Could VPN or antivirus have anything to do with it? It shouldn't, because all other texts are working.
No, that shouldn't be the issue. And this is just a traditional SMS number, from your phone, right? It's like a WhatsApp number, anything like that. Yeah. So what's your carrier, by the way?
I'm using T-Mobile.
T-Mobile.
Mm-hmm.
That might help. Yeah. Again, I'm going to take this back to back at you to do more troubleshooting. We'll keep you in the loop.
Okay. Thanks for your help.
Mm-hmm.
I have a question for Kyle. I recently ran into an issue where a guy has a VA loan and he needed just a little bit more time to close the loan. At least that's what we were told. So we let him do a pre-occupancy agreement, and that little bit of time has turned into a lot more time. So my question is, for VA loans, how long does the loan usually approval last? Is it very similar to conventional, where it's kind of the lock and everything's decided by the bank, and underwriting's done by the bank? It's just underwritten by VA, or does VA have a different criteria?
No, it's different for certain things. Like for VA, you need the termite inspection, which is good for 90 days typically, and some lenders have overlays on that. I believe the VA says 120, but there's certain things that are going to expire the same for every type of loan. Like credit reports expire after 120 days from being pulled. So if your closing date, if your guy was pre-approved or gal was pre-approved 2 months before being under contract, and if they've been under contract 2 months, their credit report's going to expire. So that is going to be the biggest factor. But as far as like an underwriting approval, those won't expire. It's just there's new docs, the pay stubs. Now we're looking at 2021 W-2s that we're going to need. But that's coming in March 1st. That's when those are kind of needed. But if it happens to fall that late, I hope it doesn't. But so the new documents just bring in possibly new issues. So there's no set answer as far as an expiration on a conditional approval. It's usually the conditional approval expires when the contract close date kind of goes past that. So a new conditional approval will have to be issued once the new docs and the new dates are set up. But the rate lock and everything is set by the loan officer and the client.
Okay, thanks.
Does that make sense? Is that what you're asking?
Yes, it was perfect answer. Thanks.
Anyone else got any lender questions? I have a couple things I wanted to chat about too. Some agents that I work with, I get some common questions or things that I hear that are either wrong or maybe hurting you guys. So I wanted to share some of that information.
Hey, Kyle, I got a question real quick.
Yeah.
So, in putting in a lot of offers and trying to be very competitive, after let's say my offer doesn't get accepted, I call a listing agent and just say, hey, what could I do to be a little bit more competitive? And they'll sometimes tell me what they accepted. And one of the things I often hear, and I'm not too sure exactly what they're saying, is they'll say that the offer they accepted, the buyer waived the appraisal, right? So that's a term I hear oftentimes, but I feel like I hear it in different contexts, right? So can you just explain what does waive the appraisal exactly means, or even if folks are using it, how they may be using it correctly or wrong, because they'll just say that and then they don't go into further explaining what exactly that means, and if I could even utilize that as a way to be competitive in offers I submit.
So that's a good question. The buyer doesn't, make that choice, and the loan officer doesn't either. It's the lender. And going back to what we talked about earlier, it's the automated underwriting system. So when COVID happened, there was a lot of regulation and guideline changes where they were trying to let appraisers not go into the house. And then, so there was drive-by appraisals being done. But basically, when we run it through the automated underwriting system, it'll tell us if we need an appraisal. And the only time when we get appraisal waivers is if you're paying cash, which you don't need me for, or you're putting a significant amount down. But the guidelines, the automated underwriting systems, they're connected to the internet. The algorithm is updated frequently. So I'm starting to see less appraisal waivers as of like 3-4 months ago than we were before. That's probably because of how housing prices have inflated. They don't want to get this to be 2007 where, we were buying appraisals and values from appraisers. And we don't want to artificially inflate the market. And by having a computer determine a value can do that, because you can do refinances with no appraisals now because of the new guidelines, which has eased up a lot of the transactions that we do. But to answer your question, that's a question for the loan officer. But you can almost guarantee, unless you're putting 40-50% down, in most cases nowadays, it was maybe 30%, 25%, you could see that on other deals with a good amount of assets. But right now, I haven't seen an appraisal waiver without having some, 40-50% of equity in the house.
And that's on the lending side,
No.
but I think on the real estate part, Norma, you want to answer on the real estate part?
Yeah,
Yeah.
it's because from the lender side, Kyle is answering that question, and you don't run into too many of those. It's nice when you do. But in this particular case, he's talking about putting your buyer in a competitive position to be able to win the bidding. And the problem is that there are people out there that are offering one well above the asking price, which may very well exceed what the property will appraise for. The property is still required, the lender is still going to require an appraisal. But what the buyer is saying is that I have cash, or they better have the cash, and they'll need to be able to show proof of funds to that seller, that if the property if they're waiving the appraisal, offering an amount over, the gentleman said $40,000-$50,000 over asking price, and that's correct. Last summer that was happening, if not more. That property was very well going to not appraise for that sales price, and that seller wanted some assurances that that buyer was still going to be able to move forward with the transaction. And the only way that's going to happen by way of approval with the lender is that they have to come up with the additional cash to offset the difference. And you just better be sure that you've got the cash. to be
Yeah, and
able
as a
to
good, as a
make up the
good
difference.
listing agent, you want to see the proof of funds that they
Correct.
have, you know.
You should
and
ask for that,
Yeah,
right?
you should ask for it as a good listing agent, you know, a
And
representative.
there's going to be need to be a separate addendum in the offer
Mhm.
that the lender is going to want to see, that states that you understand that the lender is not going to insure the property for anything over the appraised value. I'm not insure, but lend over the appraised value, and that you understand you're going to have to make up the difference in cash at settlement table.
And what I've also seen is people cap it. I know they'll do it, you know, there's no appraisal, or they'll say wording like, you know, they'll cap the dollar amount. You know, well, I'm only going up this high as far as the dollar amount, then that's it.
Then you
Yeah.
right, then you're starting to get into all the crazy variations that came with this crazy summer market. Yeah. Stuff I'd never heard of before.
So,
All right, thank you very much. That's very helpful. All right.
Kyle, is there some,
Hi.
yes.
Hello. Hi, Delia. Thank
Hey.
you. So I do have a question. It's regarding the appraisal waiver. Will VA allow that?
It all depends. Yes, I mean, it all depends on the underwriting system, but it's my understanding that the VA does not allow the veteran to pay over the market value. So I've had in the past where, you know, VA appraisals have come in lower, and they used to do it when I first started in the industry, but it's my understanding from the couple deals that I've done that they can't pay over the value. And there's a reconsideration of value that is available for every VA appraisal. And it's a detailed page that you have to fill out. But that is also kind of it's a tricky thing, because the veteran has to then sign a letter saying that they want the reconsideration of value to be done, meaning they want the sales price to be increased then. So they would have to be, you know, in agreement that they want to have the appraisal relooked at.
But
Kyle,
the buyer can go over asking price, can't they? Or no?
It's my understanding that on the VA, they can't anymore. But
if they want financing, correct? Yeah,
Yeah,
are they able to state that they're willing to pay over the appraised value, as long as they put that in writing and state that they're going to be able to bring cash to the table to make up the difference, understanding that the lender is only going to lend based on the appraised value?
Yeah, you know what, I'm thinking more along the lines of, you're correct, because most VA loans is zero down. And when they do the zero down, they don't have that extra money. So you don't see a ton of veterans putting in the offers to do above and beyond, especially with the active duty ones that I work with. But I misspoke. You are correct. You can put cash out of your pocket to make it work, but you'll never be able to. The whole VA loan is meant to protect and benefit the veteran. They don't care about the seller or anything like that. So I may have mixed that up, where they used to not do that and they do it now, but I'm going to double check on that. And for now, I would say, yes, you could pay over on a VA loan. And I will let everyone know if I turned out to be incorrect on that.
Okay. Thank you.
Mm-hmm.
Al, I have a question for you. I have listed a house in Virginia, and it's a condo. And the buyer is going VA, and the lender called and said that the condo is not VA approved, but they can get the unit VA approved. Have you ever heard of that?
It's called a
All we had
spot.
to do- Huh?
It's a spot approval.
Okay.
So
I never
that's-
knew that they could do that, but they're getting now the unit is VA approved.
Yeah,
The
so
building is not.
there could be units within a condo that are VA approved. And the thing you're seeing wrong with condos now is when people stop paying their rent, and the investors who own these units, they stop paying their HOA dues. Now the HOA doesn't have the money they're supposed to have, and it's not passing lender requirements. So a lot of HUD and VA condo approvals are not in good standing. So spot approvals do help with that, but you still need to have I don't know the exact number, or what the percentage is.
Yeah,
but
you do. They needed, like the, whatever,
the questionnaire and
the questionnaire, they still
Yeah.
needed all that filled out. And that had their own criteria, just like if the whole unit was.
yeah,
Right.
and you're better getting that done with a direct lender, not
Yes.
someone like, I mean, Quicken may be able to do it, but I don't see them wasting their time on something where they're going to be, buying an asset or putting, this loan out there on a single condo. I could be wrong. It's not something you see a lot, and it's not something
No, so I
lenders
never
look
heard of
to
it
do.
before. Yeah.
Lenders will find a way to say, got to go conventional or something like that,
Yeah.
rather than trying to do spot approvals. But having money down changes that. If your client is putting 20-30% down, that affects a spot approval. So that could be, and yes, it can be done with FHA too. That's what it kind of originated at with HUD.
Hmm. I didn't know that. That the spot approval. I wasn't sure about that. Okay.
Yep.
You have a
And when
gen-
you guys are looking at condo approvals, if you start, I don't know if you guys do this or how agents do this, but if you type in HUD approved condos or FHA approved condos just in Google, the first thing that comes up is that website, the government website where you can look those up. Same with VA. But when you're doing that, make sure that you're searching by county, not just like the zip code or the exact address. A lot of times these are inputted wrong. I've had a condo that was in a certain zip code. I couldn't find the condo listed on the FHA approval, but it ended up being FHA approved. It was just listed in a different zip code. And I found it multiple times now. So if you're unsure, or you have a client that wants to put an offer in, but it says it's not FHA approved, take 10 seconds, double check, make sure that it's not listed on the HUD website. And maybe, you earn yourself a deal because you tell the listing agent something they don't know, and your buyer can offer FHA financing. But
And if you're not sure how to use that, you can always reach out to Kyle. He can look it up for you as well.
Yep.
Follow-up question from Wilmer. Do you have access to FHLB grants?
So FHLB is based out of Atlanta, and they were paused. I don't do a ton with FHLB. Chenoa is the one that we use a lot. It's a national program. So I can't answer that if I have access to them or not. And I don't even know if I know they're back doing them, but I don't know what capacity. But I'll check and see if we're eligible for that. I usually use Chenoa, which is the national program, because it offers a little bit better terms sometimes, but I'll check and see for you, Wilmer. I'll shoot you an email.
And then we have another general question from the chat. How do we deal with dual agency at Taylor Properties?
How do we deal with what?
Dual agency?
What do you mean? How do we? Not sure the question. How do we deal with it? With dual agency? Are we sure what dual agency? I mean, do you understand when dual agency comes into effect? I guess, do you understand that part of it? Who's this from?
This is from John Robinson. John, you there?
Still there?
I am here.
Okay. So do you understand how when a dual agency is, comes into effect?
Yes.
Okay. So your question is?
In other words, if we have a seller and buyer within Taylor Properties on the same property, how is that handled? And if I had a listing and I'm, of course, the listing agent, then I get a buyer as well. How is a situation like that handled in Taylor?
So you have the seller and that you represent, and then you have a customer that's the buyer.
That's correct.
And you're the only agent. That's not dual agency. That is.
Well, and or another agent in the company sells my listing.
That would be dual agency, and that's fine.
That would be dual agency. Yes.
Yep. But
Okay,
and
so
you
what-
represent both, it's not.
Right.
Well, you can't represent both, but
In the latter, how do we deal with that in the company? Is that acceptable? That's totally acceptable with Taylor Property, of course.
yes, dual agency, yes. Mhm.
Yeah. I believe there's a form as well that
Yeah, there is.
would apply in that case. I think it's consent for dual agency is the name
Yeah.
of the form.
Delia, what about
Right.
case where you have not a customer, but a buyer client, and then you also have a listing. I know in the requirements of that, the broker's supposed to assign another agent to represent one of them. How,
Not
Not
necessarily.
necessarily.
Yeah. In Maryland, you can only represent one person. Okay. So
Right.
if you represent the buyer, you have the buyer agency agreement. If the seller does not have any representation, then you can treat it as a FSBO. Okay. Or let's do it vice versa. There's different ways to do
no,
it.
I'm specifically talking about, I have a listing and I have an agreement, and then I have a buyer that's interested in that listing.
You can write the contract.
But
But
at
then
that
you're
point, I'm
fi-
representing two people.
No, you're not, because you're going to, you have the listing agreement with your seller, and then you have the
Right.
understanding whom real estate represents from the buyer, stating that the buyer understands that you represent the seller. That's all you need. And then you can write it.
Delia, if I
Go
may,
here.
may I add a comment here, please?
Yes.
I've had situations such as this, wherein I had a listing, had a buyer, and had a seller rather, and a contractor or client was interested in property. And what I did in the contract, page 10, I think it is, of the contract, 10 or 11, I wrote the statement, quote, the agent, the buyer and seller agree that the agent, Anthony Fears, represents the seller, and that the buyer understands that the agent is, quote, assisting the seller in the purchase of the buyer in the purchase of the property. Had both of them to sign it, and pursuant to the law, to
Just muted yourself.
You just muted yourself.
oh, I'm sorry, that those contracts have been accepted.
Yeah, what we always recommend here is that if there is a form to be used, we use it. Okay. We're not lawyers. We don't write, any blank addendum. It's for very simple things. But in this case, there is a form, which is the understanding. And that tells the buyer that they understand that Josh represents the seller. So, and it's a 2-page form, and it tells you exactly, that's the form we use. And that was the form that was created for the scenario.
So just to clarify, I have, in this case, I have 2 agency agreements, one for a listing and one for a buyer. And as soon as they want to enter it, basically I'm forfeiting my agency agreement with them, with the buyers, and we'll be representing the sellers. Correct? That's what I'm hearing.
Well,
One
you
or
have
the
to, you
other.
can only represent one person. Go ahead, Norman.
Yeah, no, just, I think he's correct. It's
Mhm.
one or the other. Agreement would need to be canceled.
Okay, so
Hi, there
you know,
is
in all the-
Wilmer. Want to make a comment?
And then the whom real estate agents represent would be signed by the person which you cancel the agreement. Actually, all parties would be seeing that because it'd be made part of the offer.
Yeah, just the only time you need the understanding, and this is just the rule of thumb, the only time you need the understanding whom real estate represent is if someone is not represented.
Right.
It's the only time you need it. You either have a listing agreement or you have a buyer agency agreement. And the only time that form is used is when somebody is not represented.
Can I make a comment as well in that?
Yes.
We just have to, I mean, when we have, I had a few of those situations last year, probably about 3 of them. And we have to make sure that the buyer, who is the customer, they know very well that he hasn't been represented. Because I mean, in the transaction, because you're talking with both of them at the same time, they feel very comfortable, and then they forget. And before we do anything like that, you have to make sure, and like I think it was Norman said, you have to let them sign an addendum saying they are not represented. They're doing on their own and they haven't been represented. And like you say, let them sign the understanding form. I have 2 or 3 cases like that last year. And it can be a little bit tricky because they think, you are representing them and we're not. you represent the seller in that case.
Delia, you can ask one question. I don't know if you're accepting any more.
Yeah, go ahead.
Can you tell me if I'm kind of like in this ethical gray area? So I'm meeting my buyer at an open house. I get to the open house and it's a Redfin open house and an agent is not actually there, but they set it up where I guess anyone who wants to go into the home, they put in kind of like a digit. I think it's direct access or something like that, where there's actually no agent at the house. And that's how buyers are supposed to get in. I'm waiting for my client to show up. While I'm there, like 2 or 3 people want to come see the house, but they can't get in because of whatever system they're in. But I go ahead and I approach them. I'm like, hey, I'm an agent. Where's your agent? They said, we don't have one. And I said, do you want to see the house? And they're like, sure. And I end up showing like 3 potential buyers the home. And I end up getting them as clients. So I'm asking you, is that a ethical gray area there? Because the agent is physically not there and I was there to show the property?
Yeah, I guess the question is what agent?
Yeah.
Yeah.
I mean,
Yeah, what agent? They didn't have an agent. I'm assuming
They
you
set
asked.
it up for free access. I mean, I've had a house listed directly across the street when be out cutting my grass and people, be up poking their nose around the windows, et cetera. So I'd walk over, ask them if they'd like to see the property. Of course, ask them if they were represented or had an agent yet, but done the same thing, picked them up as clients.
Mhm.
So as long as you've been very careful to ask them if they are in being represented by another agent or working with another agent, I think you're fine.
Fine. Mhm.
Because I think the way I see it is if an actual agent was physically there, right? I don't want to say I wouldn't be allowed, but it's kind of a messy situation for me to go to another agent's open house and then hand out my cards if they're unrepresented, correct?
I think you're doing both the buyer and the seller a favor by
Yeah, no, I think
moving
you're
that
fine.
forward.
I think you're
Okay.
fine. As long as they weren't represented, you did okay. You're
I
like,
did okay.
Hey, where can we get a list of Redfin open houses?
I know, I want one of those. Wait, I've never heard of such a thing. I was
That's
gonna-
not- yeah, that's how they're
horrible.
doing. Yeah.
Yeah, I could buy a house again. Sit outside. But I do
Yeah,
have a
fine.
question and then I think we're gonna see if we can wrap this up, but I have one other question or a statement. That's a question. When you show a property and you don't have a buyer agency agreement, who do you represent?
Seller,
Huh?
The seller in that moment.
Seller.
absolutely.
So, and a lot of people don't get, a lot of these agents have a hard time getting the buyer agency agreement signed for some reason. And if your clients don't want to commit to you, then at least do it on the houses that you show them. Before we enter this house, I need you to sign this just on this house. If you can't get them to sign one for any length of time. There's a lot of agents that are still not getting that stuff up front, which is not good.
And use your loan officer to talk you up when you send them over and get a pre-approval. Make sure that you guys work together because it's good to have a second voice, someone who's worked with you before and say, this person's great, all the deals they do are great. You really got lucky finding this agent because not all agents are created equal, and I've dealt with some bad ones, but you got a good one. Lenders will do that all the time. So just make sure you have the loan officer talk you up, have a good relationship.
Mhm.
I can vouch for Kyle. On a lot of my buyers that we represented, he just reaches out to the seller right away. And there's questions he can answer and there's questions he can't answer, but by him immediately reaching out to the other side might give you that little bit of competitive edge and make that seller feel a little bit more comfortable with your client's ability to purchase. So Kyle's done this on several of mine.
I will say that the VA house that I have listed, which is my aunt, Kyle did my aunt's loan to purchase another condo. And she's up there in age and she called me, she goes, he was so good. He helped me through the whole thing. Anything I needed, she couldn't praise him more. And I know that's why, I mean, anybody I have, I always give to Kyle.
I'll
Yeah,
pay you
this is-
guys both the $10 after.
She was
after
very
we're done here.
happy.
Yeah, thanks.
Hey,
thanks for
Carl,
talking.
Carl, you still owe me, so, on my chart there.
Well, I'll work with you any day of the week, John. You're the best.
Yes,
All
Norman.
right.
Can I go
Thank you,
back to
Carl.
one thing that the gentleman talking about asking about dual agency, I wanted to point out. I know there are not many of us out there, Anne Arundel property agents, but if you are an Anne Arundel property agent showing a Taylor Properties property, that is still dual agency in that case.
And
Even
it's
though you
one
got
broker.
separate names, same broker.
Yep, it's one broker. And I don't know a lot. We have two companies. We have Taylor Properties, we have Anne Arundel Properties. So I don't know if you guys knew that. And Norman's with Anne Arundel, and I think Joe's on here too. Joe, where are you at? Are you still on? Joe's been one of the longest people that's been with our company. He's with Anne Arundel as well.
Super.
Yeah, what's the reasoning for that? Just out of curiosity, why two?
Well, Anne Arundel was opened first way back in the 80s. And when I met Rob, he had 5 agents and we started just, building the company, and he always had Anne Arundel Properties. And then once we started growing, we figured let's try to grow out, outside of Anne Arundel County, PG County, Frederick, all the other states. Anne Arundel didn't fit. So we opened Taylor Properties. It's more for the name. But we have quite a few original people like Norman in Anne Arundel Properties.
And I've planted my sign in 12 different counties so far.
Doesn't matter who you're with, it's exactly who you are, right, Norman? Yep. So, anybody else?
We have one last question from Nasir. On MLS listing advertising property as close to church, mosque, or temple, is that a violation?
I don't know.
I want to say you stay away from it.
Yeah, that's what I'm kind of thinking. We can look into it, of course, but I'm thinking I wouldn't mention that, but I will look into that. And with these questions, we'll all get them together and just do a blast email out with the answers that we find. Okay.
Yep. Oh, one more. Can you be a loan officer and a realtor on the same deal?
Not on FHA. Conventional, you can, not on an FHA.
You have to be family now, don't you? I don't know. Like, I think you can represent family member for compensation as a real estate agent and a loan officer, but I don't think you can represent someone. I'll have to look. On my side, I think you have to be related to that person.
If I'm an agent, okay, and I have a client, if I can't represent them if it's an FHA loan, meaning a loan officer.
Mhm.
You can only do conventional. You can't do an
Okay.
FHA.
Hey, Carl,
Yeah.
rates are going crazy. It looks like a slot machine going up. Or what's like in your forecast out in the future here? And I know it's going to hurt a lot of younger and people getting started out as those rates start creeping up. Kind of what's your gut in regards to the market?
Well, there's a general consensus that the Fed is going to be increasing rates over the next 2-3 years to help with inflation and to kind of push back on the buyers who want to buy all these houses. They don't want too many people getting loans right now, so they can kind of I guess curtail the inflation that's going on. So rates are going to go up for the next 2-3 years. They've been artificially brought down. But when the Fed raises their interest rates, you all should know that that's not mortgage interest rates. That's the interbank rates, the lending rates. Has nothing to do with mortgages. And we already know that they're going to do that. When the Fed releases their minutes and you see on CNBC, the ticker's going nuts and the 10-year T-bills dropping and everything, that has an effect on it. But the lenders already know that. That's already calculated into their pricing. It's the stuff that we don't know, like the variance from COVID. That's what really can change the rates up or down on a day-to-day basis. But over the next 3 years, they're going to go up. And, you know, I mean, when I first got into the industry right after 2012, you know, we were doing in the 5s, and it's not, most people refinance their home within the first 7 years. A lot of them within the first 5 or 3 years. So when you're trying to sell, you're muted, John. What'd you say?
I said refis will not be going on. People, you know, as rates creep up,
Maybe,
people are gonna,
but
like, you
cash
missed the
out.
boat if you're saying the next, you know, definitely next year, 2 years, you know, rates creep up. I just see like our supplies down, rates are up. God, I sound like Eeyore or something.
Yeah, I mean, it's going to be higher rates for the next 2-3 years, but the focal point should be, look, you know, there's programs now that conventional is doing and FHA is doing, that the VA has been doing for a long time, where these people can do very low to no cost refinances just to lower the rate or shorten the term. So those programs are coming out because of the refi boom that we've seen in the last 2-3 years. But if they buy a house and they don't like the interest rate's always going to go up and down. There'll be a time when they can refinance, and you shouldn't buy a house because of an interest rate. You should buy a house because you need shelter and you love that place. You know, the rest will take care of itself. And as long as they can afford the payment, what does the interest rate matter? Because again, most people refinance their home within 3 to 5 years of buying their house. So it's not, and you don't think that's going to be you, but right now values are skyrocketing. So yeah, that person who bought a home last year that has, you know, a 2.25% interest rate, and they spent all their money on their down payment and they wanted that pool, and they have 100,000 in equity now, they're going to call us and they're going to get a cash out loan. The interest rate's going to be a little bit higher. They're going to restart their term, and then they're going to call me again in 3 years and, you know, lower the interest rate. And it happens all the time. I've done multiple refinances on the same house in my career. So it's, rate isn't everything, and it is going to be, and of course you've heard every loan officer say that 100 times, but every bank is within 1/8 of a point of each other. So one lender to the next, you're going to find very similar programs. But yeah, rates are going to go up for the next 2-3 years. So if you're looking to refinance, shortening the term is going to keep you in the 2s and 3s, you know, the high mid 2s and the low 3s. But if you're looking at 30 years cash out, you know, you're not going to see those 2% interest rates without paying points. Good question, John.
Cool. And I think with that, we'll wrap it up. We're running a little bit over, but everyone, thank you so much for joining today. We had a great conversation. We're going to be following up with a lot of you guys with some outstanding questions that we need to get answered for you. But we'll also throw this recording up on YouTube and our client day website and Facebook as well. With all that said, thank you, everyone.
Thank
Look forward
you.
to this one.
Thank you, guys.
Thanks.